CME Group in beautiful Chicago, Illinois, where you always save more money. I'm Mark Sebastian, Chief Operating Officer of OptionPit.com, and this is your Mr. Top Step morning update. Well, what's going on? The answer is not a lot's going on. We had some decent numbers today, had some decent numbers yesterday, and we've got a collective nothing to show for it. S&P's right around this 1400 level. We're seeing some resistance. The futures keep bashing into this 14 level and then giving it away and then popping right back. So we're kind of stuck in a real tight range. Monday we talked about selling a short-term butterfly. That would have worked great if you sold a short-term iron butterfly. Would have worked spectacularly. I still think that's going to be the case for the next couple of days. We had a really nice VIX pop yesterday. Now, part of that was a correction from the calculation in VIX. We're in a weird time for VIX right now, where there's actually only 1 month, that's September, that actually has 37 days in it. So we actually have to extrapolate into 30 days. So it makes the VIX calculation a little interesting. Looking at S&Ps themselves, I was looking at the major indexes, the S&Ps, the RUT, the NDX, and of all the indexes, implied vol to realized volatility, the RUT is trading at the closest level, where implied vol is barely trading over realized vol. All the other indexes we're seeing a nice wide margin. Makes me think that we're going to be seeing a drop in realized volatility in the Russell, which makes me think that's where you might want to be looking to sell premium. If you're looking to buy, I still think that you do it in individual equities. There's some real deals out there. Apple, Google, Wells Fargo, all super cheap. IBM just traded off of a 10-year low in implied volatility. That's a buy. And against a VIX that is not at a 10-year low. That's the thing you have to understand, is that everything's relative. If you can buy a nice basket and then sell SPX against it, and run a kind of a vol arb, if you will, there's a great trade there. Now, for futures traders, again, it's going to be a very choppy, tight-ranged market. How do you trade that? Well, you do your best, super tight stops, and what you're going to be putting out there is you want to sell some premium here, and probably pretty tight. I still like that that short iron butterfly as a play against your futures trading. So, what do we got going on for the rest of the week? Well, we got an auction on Thursday and a couple other things that I think could be interesting, a couple of economic reports. But in the end, I think that it's going to be a slow week with kind of meandering higher. Don't be surprised if over the next couple of days we get a little bit of bid and we end up near 14.25, the 52-week high. So, from the floor of the CME Group in Chicago, Illinois, I'm Mark Sebastian of OptionPit.com with your Mr. Top Step Morning Up.